In this class, we will focus on steps for computation of total income and tax payable. Computation of total income and tax payable. Clear? If a person approaches you as you are being a tax expert, he wants to know what could be my tax liability. Okay, tax liability. Then, as being yourself tax expert, now your duty is to find out what is the tax liability for this person. Is that clear? For this person. Usually, you can calculate the tax liability on his income based on the income earned. So, incomes to be earned is not so. Income earned. You know that financial year starts with 1st April every year, ends on 31st March in the next year. This is the financial year. In any running financial year, if anybody comes to you to ask about what could be my earnings and how much I have to pay the tax, automatically what happens? We are supposed to calculate the earnings he has made previously. Means prior to this year, 1/4 of the previous year, 31st March, and this will be the year. This is the year in which he demands to calculate the tax liability, otherwise assessment year. This is called assessment year. In the assessment year, we calculate what is his income in the previous year. For the income, what could be the applicable tax also be calculated in this current year. This is called previous year. Clear? Always remember. For example, if you plan to go for your exams in the financial year 25-26, financial year 25-26, it means your exam falls anywhere between this period, 1/4/2025, ends on 31st March 2026. Okay, you are asked to compute what is his total income, what is the tax liability and all. Then it means that you have to calculate for the year 1/4/2024 and 31st March 2025. In this year, you are going to write the exam. In this year, you are going to assess the income earned in the previous year. So, this year in which we are going to assess the income of the previous year called assessment year. Prior to that is previous year. Prior to that is previous year. Okay. Clear? Assessment year means a period of 12 months commencing on the first day of the April. Every year ending on March 31st of the next year. So, always the assessment year will be starting with 1st April 2025, ends on 31st March 2026, consisting of how many months? 12 months. So, that we know, sir. Assessment year is 12 months. What about the previous year then? How many months will be there? Maybe 12 months or less than 12 months. Not necessarily 12 months. Because sometimes the business newly started half of the year itself, probably 1st July 2024. If the business started on 1st July 2024, then naturally we have to start calculate from that date to 31st March 2025. For this particular case, the previous year not necessarily being 12 months, it may be less than 12 months also. So, income earned by a person during the previous year 24-25 will be taxable in the assessment year 25-26 at the rates applicable for the assessment year 25-26, which is from the Finance Act 2024. Is that okay? So, what happens? We have assessed for this period the income of the earner being 10 lakhs. So, the income earned by the assessee in the year 24-25 is 10 lakhs assessed in this year. Now, what is the tax rate, sir? Then tax rate you have to refer Finance Act. Which year's Finance Act? Finance Act usually published year after year, usually 1st April every year. Okay, in the Parliament that we have discussed. So, in the Finance Act, especially, if I want to know what is the tax rate applicable for the financial previous year 24-25, Before that year, Financial Act will be taken. Before that year, so before this date, 1st February 2024, Finance Act may be published. Finance Act. That Finance Act contains the rate of tax. Probably if the rate of tax says 10%, immediately you calculate 10% and this, so 1 lakh will be the tax. Is that okay? So we have to understand 3 dates. One is all about assessment year, another one is the previous year. Previous year, what we have to now calculate what is this income for the previous year. We calculated that. For that, what tax rate should be applied? Prior to that. Okay, prior to the date's value will be taken. Usually prior to that means 24 beginning. Usually 1st February 2024 Finance Act may be published as 2024 Finance Act will be taken as a base for calculating the tax rate. Clear? Hope this is defined under section 2 plus 9. Already in the previous class I explained. Section 2 contains only the definitions. Section 2 contains a list of definitions. Go and see a Ban Act for just a glance, not required to memorize. It will have a complete set of this one means glossary like for definitions. So here section 2 clause 9 defines assessment year. So we have now completed that. Clear? So as I already told you previous year. Section 3 defines. Section 1 is all about Income Tax Act. Section 2 has lots of definitions. Okay, no need to mug up all those things. Few, whenever we are in need of understanding some terms, go and refer to section 2. Of course, not required to memorize all. And section 3 is all about the definition related to the previous year. So, already told you previous year usually prior to the assessment year usually starts with 1st April, but not necessarily 1st April. So, previous year means the financial year immediately preceding the assessment year. So, preceding to the assessment year will be the previous year. The year in which income is earned known as previous year. Okay, usually 12 months. Sometimes it may be less than 12 months too. For example, now previous year in case of newly set up business or profession. If any new business started or profession started, right? If I am being the doctor, I may do the practice, then it's called professions. Right. Nearby, I may have the medical shop, then it's my business. So, slight difference between the professions and business is all about based on the educational qualification and experience. Have the professional qualification, have the experience, then you will become professionals like doctor, engineers, advocates, and yeah, of course, you are also chartered accountant, cost accountant, also being called as professionals. There's a designated course you have to finish off and do experiencing, and with that skill you will possess the qualifications to run that. Then it's called professions. If it is not so, then it comes under business, like buying and selling of a commodity. Whatever it may be, if you are starting a fresh one, the first previous year of the business usually starting the date of setting up of the business. Rest will be the same. For example, question. Determine the previous year for the assessment year 25-26. SSA is running business from 2001 onwards, so very old one. So 25-26 is the assessment year. Now the question whether SSA started in the earlier previous year? No, it was started some years ago. Then definitely the previous year for this being 1/4/2024 ends on 31st March 2025. 2025. Is that clear? Hope now you'll be able to understand this. Starts with 1st April and ends on 31st March. Now, SPB started on 9th October. So, for this assessment year, usually the previous year starts on 1/4/2024, ends on 31st March 2025. 2025. But this business started in this previous year, not prior to that, started on 9th October 2024. So this period, the business doesn't exist. How can we say the previous year being more than 12, means equivalent to 12 months? So for this, the previous year starts on 9th October and ends on 31st March 2025. Here, the duration of the previous year is less than 12 months. Less than 12 months. Is that clear? Hope now you'll be able to understand this one. So I have completed the assessment year as well as previous year, and Which year's Finance Act should be taken? So these are the three components we have completed here. Clear? Now, section 4 is all about charging section. Charging section. Whatever the income may be taxed by the government, okay, the point in time at which it is going to be liable to deduct tax or liable for payment of tax is called charging section. Charging section. So if you go to the hotel, the moment you order, will you be liable to pay the bill or not? Not only that, it should be available there, it should be served to your table. The moment, not by ordering, the moment it is served to your table, whether you eat or not eat, you are liable to pay. You order, sometimes later the bearer comes, sir, we don't have the food. So you are not liable to pay. You order, sometimes later he brought that and kept in your table. Whether you eat or not, you have to pay. Okay. So from this it is very clear you are liable to pay the hotel bill or restaurant bill when the moment the order delivered, not eating, not the ordering. So that is what about the point of charging. Similarly here the point of charging of the taxation. Point of charging of the taxation is called charging section. Right. Here you have to compute the total income. First, step number 1, you have to calculate the total income. Sir, how can I calculate total income, sir? Go and refer Income Tax Act. Go and refer Income Tax Act. Our duty of calculating the taxation starts from section 15. So you have to be master with section 15 onwards. Section 15, 16, 17, these are the three predominant sections to understand how to determine the taxable income for a salaried person, salary. Section 15, 16, 17, these are the three sections. Based on the three sections, how can I calculate what is the taxable amount? Refer that section 15 and 16, everything as per the Income Tax Act. Okay. Thereafter, we have calculated the tax liability. So we have calculated the total income because of salary, because of letting out of the property and making any rental income, or doing any business or selling any property. Those income not falling under those heads. 5 predominant heads we have. Okay, work and earn, do business and earn, let out your property and earn, you have ancestral property or some other asset purchase, sell it off and earn money. These are the 4 predominant income. One is all about salary income, second one is all about rental income, house property income, third one is all about business income, business or professions. Fourth one is capital gains. Still we have some other incomes are not classifiable under any of the 4 heads, sir. Keep as other income. These are the 5 heads of income we have to compute as per the income tax provisions given under Income Tax Act 1961. Right. We have calculated the income tax. Income. Now the next duty, what is the tax on such income? So for that rates, you have to go and refer Finance Act. Step number 2. Compute the income. Step number 2. Apply the tax rate mentioned in the Finance Act. Which Finance Act? Okay. Just beginning February month, Finance Act will be taken for the previous year. What of the previous year may be? The starting previous year before that. Okay. February month. Okay. And the tax is charged on every person. Charge on every person. Is that clear? So there is a slight difference between every person and every income. So am I going to tax only the salary income or house property income? No, if I am talking about Mr. X and we have to charge the taxable amount on X for all of his income together, all the 5 heads. And income tax is charged in the assessment year for the income of the previous year. Okay, previous year income, for that income is assessed in the assessment year and tax is also charged in that. While calculating the tax amount, we have to subtract these 3: TDS, TCS and advance tax. Tax deducted at source, tax collected at source and advance tax. Sir, I don't get the answer of these 3, sir. No need to worry about that. So we have 3 separate chapters for all the 3. We have a separate chapter for TDS, TCS as well as advance tax. Anyhow, now and there, whenever I need to explain that, I will explain. Anyhow, Whatever the tax you're supposed to pay, from there you have to subtract what? TDS, TCS and advance tax. So balance will be payable. So this is all about the charging of income tax liability. Charging is nothing but levying, finding the tax liability, right? Now, section 14A, section 14A, we are talking about submissory A. Here say 10 lakhs rupees is income. These incomes are classifiable as 7 lakhs and 3 lakhs. This particular 3 lakhs income falls under section 10. Section 10. Section 2 is all about definitions. Terms are explained. Section 10 is all about a list of items of income not going to be taxable. You don't need to pay tax. You can have full leave by yourself. You don't need to pay single tax on that. This is called exempt income. So I now classify his total income into exempt as well as taxable income. Income in this case I represents total receipts. And his total expenses for this is around 4 lakhs. Around 4 lakhs. Now, minus expenses. This is about the total receipts. The total income made by him is 10 lakhs. I found out that income into two parts, bifurcated or segregated into two incomes, like exempted income as well as taxable income. Okay, you invested small amounts since very long back in the insurance company, LIC has taken by paying the premium. On maturity, or 20 years later or 15 years later, you are getting a lump sum amount, say probably 3 lakhs or 4 lakhs. Like that, whatever the amount you are getting from the LIC company, as per some provisions applicable under section 10, is totally exempted. Totally exempted. Understand that. Out of 10 lakhs, this 3 lakhs is not taxable. You have to pay the tax only on the 7 lakhs. Is that clear? Now, I have to now find out 4 lakhs is the common expenses I have done. Immediately there will be a question. Okay, you have spent 4 lakhs. Now the question is that 4 lakhs is for this income or this income? Sir, for both the purpose, sir. If you say that 4 lakhs you have spent is to earn this 7 lakhs as well as this 3 lakhs, both, then it's your duty to segregate that common expenses for the taxable income as well as exempted income. In this case, 2 lakhs 80,000 may be assumed to be, so 3 lakhs may be assumed to be the expenses expended for the taxable revenue. Balance 1 lakh is for this purpose. Then what about your taxable income means 7 lakhs minus 3 lakhs, 4 lakhs is your taxable income. Sir, I have spent 4 lakhs, sir. Can I deduct that 4 lakhs are here? No. Out of the 4 lakhs is 1 lakh related to what? Exempted income. As the income is exempted, any expenses related to earn that exempted income is also be not considered. Not considered. So taxable income, expenses for the taxable income is subtracted to find out. Sir, I don't know, sir, that 4 lakhs is spent. No, I am not sure whether it's for taxable income or exempted income. Somehow you have to find out that. Yes, income tax authority is having the rights to bifurcate that for the taxable income as well as exempted income. Any expenses incurred, founded by some way for the exempted income is not considered for the deduction purpose. You forget both, your taxable income is 4 lakhs. This 4 lakhs somehow will be segregated. Somehow will be segregated. If it is clearly identifiable, no problem. If you are not able to identify clearly, then somehow, okay, a reasonable manner. Otherwise, the income tax department authorities may do that. Right. Section 14A. Expenditure incurred for exempted income. Exempted income are the income listed under section 10. For earning that income, what are the expenditure you incur? You don't say, sir, I lost. No, income is not considered. So any expenses for that will also be not considered. Sir, my exempted income is 10 lakhs, sir. Okay. For that 10 lakhs exempted income, I spent 15 lakhs, sir. Then what about my result? This is income, this is expenses. Both are falling under which section? Section 10. Section 10 means not taxable income. My non-taxable receipt 10 lakhs. To earn the 10 lakhs, I spent 15 lakhs. Because of that reason, I got 5 lakhs loss, sir. What can I do? As there is any income for the exempted item, you no need to pay the tax. Similarly, if there is a net loss because of the exempted item, we never bother. You cannot come to me. That's up to you. Is such situation possible, sir? Yes. Agricultural income is purely exempted. If you are doing any agricultural business on making the profit, nothing is taxable. Okay, you did a plantation, probably banana plantation you have done. You spend around 10 lakhs rupees. You thought you spent already 10 lakhs rupees. You thought it can be sellable for 15 lakhs. Suddenly what happens? There may be cyclone. The next moment what happens? All the crops gone. You spend 10 lakhs rupees. You can earn only 1 lakh rupees. So you lost 9 lakhs rupees. What can I do, sir? Nothing can be done. Nothing can be done. In the case of income, you can have completely without tax. In the case of loss, keep it completely by yourself. You don't ask me. You understand? You understand the logic? Section 14A. That section 14A disallows deductions for expenses incurred earning the exempted income. This income cannot be deductible. Number one. Assessing officer is empowered to determine the amount of expenditure for the exempted. So if I say, sir, I'm not sure out of the 4 lakhs how much is for the exempted, then assessing officer, the department officer has the rights to assess to what extent it may be for the exempted and what portion is meant for the taxable income. Okay, this provision section 14A clause 2 applies even when the taxpayer claims no expenditure incurred for exempted. So he says, sir, I have not spent any money. All the 4 lakhs is for this only. No, you cannot escape by this way. The department will come for valuing. So first of all, if you are clearly saying this expenses were exempted, don't deduct it. If you are not able to say properly, income tax assessing officer will value. You claim, sir, I have not spent even a single penny. No worry, they will come and assess themselves and they can segregate the income for expenses for the exempted income as well as tax income. Clear? Okay, that's all. This is the main process. So what are the items we have completed here? We started with the steps of computations. If somebody comes to you, assess my tax liability, immediately ask in which period he comes, in which financial year he comes. Any financial year is supposed to compute, that is called assessment year. Usually assessment year will have 12 months. In the assessment year, you are going to calculate the income earned in the previous year. Similarly, the Finance Act of the previous year applicable will be base for calculating the tax rates or taking the tax rate. And in case of previous year, not necessarily 12 years, so 12 months. If it is newly set up business or professions, the financial year may be less than 12 months. And the next one is charging section. Section 4. Okay, chargeability. So there should be total income found out or calculated as per Income Tax Act. Second one is you have to apply the rates mentioned in the Finance Act. Third one is it is going to be applicable for every person. Okay, who is called person, sir? We'll see later on. Okay, sir, I know, sir, who is person. Huh? Yourself or myself, both are person. If you keep some idol nearby your home and near outside your home and doing puja, nearby you are having a undi and collecting the some gift like and articles and some donations and all, then that Lord is also assessing. If the Lord fails to pay the tax for the collections made through the hundi, the Lord will be arrested and kept in jail. Lord means the in charge. Okay, you understand? So, artificial juridical persons. That's how we'll say. Who is called who is called persons? We'll see subsequently. Right. And income tax is charged in the assessment year for the income earned in the previous year, after deducting 3 items: TDS, TCS, and advanced tax. TDS, TCS, and advanced tax. Section 14A. Section 14A, exempted income. If income being exempted, any expenditure incurred for that is also not considered for deductions. If you demand that I have not spent anything yet, the assessing officer will come for a reasonable valuation for the exempted portions, and that will be disqualified to be deductible. Now, now, come on. Previous year being 24-25, assessment year being 25-26. Clear? The income earned in this period is assessed. That's why it is called assessment year. This is called previous year. Sometimes what happens, 24-25 being the previous year becomes assessment year. Previous year is equal to assessment year. Clear? The previous year being 24-25, in which year you are going to assess is the same year and pay the tax in the same year. Why, sir? Some foreign ships come to our port and departs with lots of luggages from Indian exporters, claimed some income. Okay, so they charge the carriage expenses in ship, flight, predominantly ships. They might have collected around 20 lakhs, 30 lakhs also for transporting in ship. Who is the owner of the ship? Maybe outside India, some outside person, non-resident. Non-resident could have collected the money from whom? India. You understand? Clear? Assume this being India. I'm not violating. My art is that much only. Okay. So, in Chennai port, ship came. This ship is owned by some US businessman. So, from India, various exporter packed and boarded over the ship. And this fellow charges the money. Say, I need almost 100 lakhs for all these goods. 1 crore. Sometimes later the ship will go off. This 100 lakhs of this US businessman earned from India means it's an Indian income. It's his duty to pay the tax to Indian government. Who? This US businessman should pay the tax to government of India. Then the ship comes here on 1st July 24. After loading all, it leaves on 15th July 24. Once it leaves the Indian port, what happens? We cannot catch. You might have seen so many Indian business magnate abscond from India after cheating tax payment, right? Okay. Earlier Vijay Malle, now he was caught and money recovered. And Nirav Modi, Lalit Modi, lot of Modi, right? Heard about that? Who is Lalit Modi? Do you know? Anybody aware about Lalit Modi? No one knows? Oh my God. Anybody know? Lalit Modi. No knowledge. Oh my God. Any online students? Lalit Modi. Now he lives only in England, not in India. Okay, what did he do? Very simple. He was the creator of IPL. Now you may know. The concept of IPL promoted in India only by his own idea, where it was already different form available throughout the world, most of the other cricket playing nations. He wanted to implement the same in India. That concept came as IPL. Very first match, okay, probably 2007 or 8, I think. I'm not aware about the exact year. During the period, he was a fan follower, like he had big followers also. Okay, ruled that cricket world for 1 or 2 years. Then lots of money laundering. He went and settled in England, not returning in India, right? Lalit Modi, right? Okay. See. Now you know IPL. I hope you know IPL. who is the instrumental for creating that one. Okay. First chairman and league commissioner of Indian Premier League, and run the tournament for 3 years until 2010. 2007 to 2010, he was instrumental. And big money plays in IPL, right? You have heard about crores and crores. Huh? Some crores were taken by him and went off, right? So that's how he was absconded from India. Still, he lives only in, I think, in England, I think. Okay, I think, right. Okay, you can go and search his history then later. So IPL is very famous now. Okay, first scam started by the time, and he has a scam. We cannot catch. Though he is being the Indian, once he runs out of India, it's very tough to recover any money from him. Then what about this scenario? If this US businessman leaves India, how can we recover it? So what happens? The Indian government has a system. If you are being non-resident, earning any money in India, before you leave in India, you have to pay the tax there itself. You understand why do we have previous year is equal to assessment year? Means previous year income is assessed in the previous year and ask him to pay the tax there itself. This situation will also be there. Exceptions. These are exceptions. What are they? Previous year income assessed in assessment year is the basic one, but of course there may be exemptions. The exceptions. One exception is all about shipping business. I am going to refer around 5 such a situation. In these 5 situations, previous year income is assessed in the previous year itself. You can very easily guess. First situation, some foreign businessman comes with his own ship in India, and he charges some carriage charges from Indian people, and for that he has to pay the tax in India. Then catch him, collect the tax immediately after he gets it from India, before he leaves India. Similar situation may happen. So 5 such scenarios we are going to refer. 5 such scenarios. Right. Shipping business of non-resident, section 172. Shipping business of non-resident, section 172. This will be applicable to whom? A non-resident, a person not usually residing in India. He resides outside India. But in income tax purpose, we have a separate set of rules to understand it clearly. We'll see that later on. Okay. Who is called resident, who is called non-resident, who is called resident seems to be, but not ordinary residents. We'll see all these things in a different concept called residential status under section 6. Now you'll understand. In case of the term I use non-resident, it means he is not usually residing in India. Right. And assessee. Assessee is nothing but the person to whom, on whom we are going to calculate the income tax. If A comes to me to find out the tax, then A being the assessee. Right. Not only that, of course, there may be some more definitions expanded. We'll see that later on. Number 1, he should be a non-resident, and he should be the owner of the ship or chartered the ship. Owner or chartered. Chartered is rental. Okay. Either he may be the owner or he may be rented it. Okay. And the ship carries either passengers, goods, livestock, mail, goods shipped at the port in India. Especially we are talking about the goods are loaded in the Indian port. Okay. So in ship, we have boarded lots of goods here. For that we have paid 100 lakhs rupees. To whom? USA businessman. Not only that, of course, he gets the money from other location, maybe around 2,000 lakhs. But we supposed to collect tax only for this one. What else? As he is being the non-resident, okay, he has to pay the tax in his own country, in USA. Then I say, okay, you have to pay tax in your country, but income earned in India, you have to pay tax only in India. Okay. If I am being in India, I have to pay the tax for all of my income. But if I am residing outside India, I am earning the money from India as well as from outside India, then I have to pay the tax only for the income earned from India. From India for this. Right. So at the port in India means Indian income. This one we never bother about. Section 44B. We'll see that later on. Okay. And the master of the ship should file ROI and pay tax. Okay. Before the ship leaves, who has to pay the tax? Should be calculated and pay the tax. ROI is nothing but return of income. This is called return of income. Very often I use this term throughout this study, return of income. Okay, return of income. We have a separate chapter for return of income or also ROI. Whatever the income I have earned, I have to calculate promptly, intimate to the government in a systematic manner. That intimation is called return of income. You should not have any confusions. Sir, I earned around 5 lakhs from my employment. I earned 3 lakhs from my share investments. I earned 2 lakhs from my business. So total 10 lakhs. So I'm going to show this as a systematic manner to the government. The moment I'm submitting to the government, no, it is called return of income. This is called return of income. So return of income, not only that, this is my income, I have to pay the tax for that also. So two statements are there. One is filing the return of income, second one is paying the tax. So should file the return of income to the government stating this is the way I earned, this is the total income I earned. Not only that, pay the tax. When? Before leaving the or before the departure of the ship. Sorry, emergency, sir. I had to immediately start and move, sir. Okay. Make some arrangements, some in charge in India. He will take the responsibility to pay all these things within 30 days. Or make arrangements for payment of such tax within 30 days of the departure of the ship. Is that clear? Clear? Hope you will be now able to understand. Now, only after all these conditions are fulfilled, the collector of customs shall grant the port clearances. Before you make the ship departure, okay, you have to finish off all these things. Only the in charge, the customs in charge, the port in charge will give the clearances. After that, only the ship is allowed to move out of this port. Clear? Either you pay or make some arrangements to be paid within 30 days. Sir, what about that section 44B, sir? We have a section called 44 AD, AE, ABA, like we have some sections, especially 44 B. This 44B is talking about presumptive income. Presumptive income, okay? Assumed. So, this US businessman collected 100 lakhs from Indian exporters, and income tax department demands tax. Now the question is that 100 lakhs is the income or not? Is it income? 100 lakhs is collected, may not be his profit. Sir, packing and loading, there's cost, transport, for that fuel and other administration charges is there for the ship and all. I have to deduct those expenses, right? I am running the business. I made a sales of 100 lakhs. Will it be profit? Sir, I purchased the material. I paid the salary, electricity. Subtract all from the 100 lakhs. 60 lakhs are the expenses. Subtract the balance 40 lakhs is your income. The net receipt will be your income, not the entire collection. You might have collected 100 lakhs, but your income being only 40 lakhs or 30 lakhs. Like. So you have to maintain the pakka document for all the expenses. Along with the ROI, file that one detail also. Sir, this is my income. These are the expenses subtracted. This is the net income for me. I had to pay the tax. I had to pay the tax. Clear? Now the question is, out of the 100 lakhs carriage amount collected, how much is the expenses, sir? How can I calculate, sir? No problem. Whatever the amount you collect, I assume 7.5% being your income. 92.5% is your income. Out of that 100 lakhs, 7.5%, 7 lakhs 50,000 will be your income. Pay the tax at the rate of 30%. That's all. Whatever the amount you collect, it's not your income. Of course, there may be expenses. You have to subtract the expenses to find out the net profit. For that, only you have to pay the tax. But I'm not sure how much I spend only for this particular 100 lakhs collection, sir. I know the expenses totally. Don't panic. Whatever the collection you do, I assume only 7.5% is your income. For that income, you pay the tax. This is called presumptive income. That special right is given under section 44B. 44B. So, deemed income, that is named as deemed income. This 7.5 lakhs will be considered as deemed income. Deemed income, like, is it real? No, we can consider this as being the deemed one, equivalent to, not exact, but equivalent to. Okay, listening or deemed listening? Are you listening me or deemed listening? Listening. Deemed listening is nothing but you will be staring at me directly, but without allowing any word to enter your ears, right? Okay, you shut your ears and listening me properly. Right, so deemed is equivalent to, not the exact one. Deemed is equivalent to, not exact. Hope now you'll be able to understand the section 172. This is all about section 172. Previous year is equal to the assessment year. When some cases, especially in those first one, shipping business. Shipping business of whom? Non-resident, not Indian resident. Who is in India only? No, we can catch him at any time. We can recover the money. If he's being the non-resident, the moment he departures from Indian port, we cannot catch him. So collect the tax before he leaves the port. Clear? Let me again brief once again. Shipping business of non-resident, you have to highlight this one. And so this will be applicable only for the non-resident. And he should be involving in which business? Shipping business. How can I determine he is involving in shipping business? He may be the owner or he may be chartered the ship. And the shipping business may carry passenger, goods, livestock, mail, or whatever it may be, that too shipped at a port in India. And how can I determine his total income? Income is usually after subtracting the expenses to calculate the net income. Okay, but I'm not sure how much expenses for this one. So no problem. Whatever the total collection you do, out of the total collection, 7.5% will be considered as income, known as deemed income. For the deemed income, you have to pay the tax. For the deemed income only, you have to pay the tax. And overall, your collection, the collection may be for carriages, for demurrages, for handling, all the things put together, right? Clear? So in Indian port, ship is here. A, okay, send some goods. Immediately, ship in charge demands pay me 10 lakhs. Pay me 10 lakhs. Okay, this is what about carriage. This is what about the carriage. How the goods are moved from port to ship. We need to have some staff, some laborers. Okay, that will be called handling charges. So second one is handling. That may be around 1 lakh. Okay, ship. So what happens if you order or if you book a cab drive? Okay, you want to move from one place to another place. You booked in Ola or Uber, whatever it may be. The time may be 8 o'clock, but you asked him to wait for 8:15. What happens? For 15 minutes, they will charge additionally. So if you are asking the ship to wait for a few minutes extra, even for cab for 15 minutes, there is a charge. For the ship, he says, your day's rent is so huge. For you, I'm waiting for so many hours. So give me the waiting charge. That waiting charge is called demurrages. Demurrages. Okay. So late to move the ship. For that around 1 lakh. That entire 12 lakhs will be his income. On that 7.5% will be the deemed income. On the deemed income, you have to pay the tax. Okay, whatever the collection may be. The collection is for the carriage and demurrages and handling charges, all the three. For all the three put together, 7.5% will be taken. And who has to find and pay the tax? Master of ship. The ship in charge. How he determines? Whatever the way he calculates, and he has to report this, which is called RY, return of income, filing of return of income. Not only filing, he has to calculate the tax applicable for that. That should also be paid, which is called payment of tax. Before he departures, sir, I'm in emergency, sir, I have to immediately move. No problem. Make some arrangements for the payment of such tax to be payable within 30 days from the departure. Unless you finish up this one, customs collector of customs shall not grant for departure. Clear? Number one. Previous year is equal to the assessment year. Number one is over. Clear? Let's move on to the next one. Section 174. Okay. Section 174 says person leaving India. Okay. So, Mr. A being resident in India, he resides in India since his birth. Probably almost his age may be 25. In the previous year, 1/4/2024, 24, 31st March 2025. Born and brought up only in India. On 1st July 2024, he wants to settle outside India because of some employment or whatever it may be. Hereafter, he will not return to India for some time or for a longer period or permanently, whatever it may be. Sir, I go for the employment, sir. At least I will stay outside India for 3 years. Okay. Hereafter, I don't come to India. I will settle only in India, outside India, whatever it may be. If you are leaving India because of the employment, before you leave, you have to calculate what is the income for this period and pay the tax before you leave. Once you leave India, then how can I collect the money? Understand? So the assessee leaves India either during the current previous year or immediately thereafter. Immediately thereafter. He does not have the intention to return to India immediately. He will not come to India, most probably within short period. His total income from the date of commencement of the previous year up to the date of departure, from this date to this date, shall be assessed as income of the same previous year and ask him to pay the tax before he leaves India. Is that clear? Okay. For example, Mr. Seth is leaving India for USA on 16/9/2024, and it appears to the assessing officer that he has no intention to return. Which date? This date. Then definitely what happens? The previous year beginning date 1/4/2024 to this date will be the previous year, like then it is assessed in the same previous year and asked him to pay the tax before he leaves India. Is that clear? So one is non-resident shipping owner. Next one is the Indian person leaving India permanently. Clear? 172, 174. Easy to remember. 172, leave 173, 174. As you left to 1, you add 174A, 174, 175, and 176. 172, 74, 74A, 75, and 176. These are the 5 sections are there. In these 5 sections, previous year is equal to the assessment. Clear? Now, third scenario. AOP, BOI, AJP formed for a particular event or purpose, then the sections will be applicable. Okay. Clear? Association of persons, body of individual, artificial juridical persons. Artificial juridical persons. No need to worry about that. Section 2 clause 31 will study about persons in detail. We have classified the persons into 7 types. Individual, Hindu undivided family, association of persons, body of individuals, artificial juridical persons, and company and all. So we'll see that later on. No need to worry about that. The next. Okay, here you will understand these are the 3. Sir, how can I keep that idea in my mind simply? It's a temporary partnership firm like. Temporary partnership like. A and B. Okay. So what happens during the Diwali period, Pongal festival season? Okay, my friends, 2 or 3 friends join together. They purchase crackers and sell for the Diwali period. Once the Diwali season is over, whatever the amount left over will be shared by themselves. So now what happens? Buying and selling the cracker business is a short term. A and B join just before the Diwali, purchase the crackers and sell for the Diwali and share that all the benefits and dissolve immediately. It's a small one. In the case of large business, A and B both may be the business people. Probably he may be the builder. He may be the owner of a construction material shop. Okay, both join together to construct a building. Okay, the building will get completed by 6 months. They started on 1st May 2024. Anyhow, within 6 months, it's going to be getting completed. Probably 1/11/2024, it is going to be completed. A is not having sufficient money. B is not having sufficient knowledge. There's an order. Then both will discuss. A says, as my engineering knowledge is good enough, so I can construct. Okay. B says, no need to worry about the material. I'll give all the materials at free of cost. Finish up and we'll share. That's how they will temporarily form a small business, a small event, and they do the business. Once it's over, they will share everything comfortably. This is called temporary business, particular event or particular purpose. This is called AB, association of persons or body of individuals. Okay. In this case, the income earned in this period in the name of AB AOP. AB AOP, association of persons or partnership firm. AB partnership firm. Okay. AB and Co. This one is formed only for constructing this particular building. Once the building is constructed, then immediately they will dissolve. So what happens? Whatever the benefit they earned here, probably they earned around 10 lakhs rupees, and this 10 lakhs is payable. Tax on this 10 lakhs is payable by AB firm. When? On this date. This is a separate entity. A is not responsible. B is not responsible. They joined together and formed a new entity. This entity does that business. Once the business is over, this entity is closed and they will share only the profit. Now the entity's responsibility is to pay the tax. Entities AB and firm's responsibility is to pay the tax. Is that clear? Then the tax will be calculated and paid within this date. Okay. SBB is an AOP. Okay, I will explain AOP and POI in detail later on. Here you will understand similar to firm, partnership firm. Similar to partnership firm. A and B together form a partnership firm and does a business. Formed on this date by A and B for a limited purpose of constructing a residential house property. The AOP is likely to be dissolved after the construction. The construction was completed on this date. They formed and completed this date. And for this period, they have to assess and they have to find out the tax and pay the tax. So previous year is equal to the assessment year. So make assessment and pay the tax and income earned on this date. Okay, on this venture before they finish off the business, before they close the business. Is that clear? So first one is shipping business to a non-resident. Second one is resident leaving India. Third one is any entity formed for temporary purpose. Once the temporary purpose is closed, immediately calculate the income and pay the tax. Clear? Now, fourth one. Fourth one is all about person likely to transfer property to avoid the tax. Avoid tax. Avoiding tax is cheating. Avoiding tax is cheating. Clear? So we should not allow him to cheat the tax. If the assessing officer comes to know there may be violation or cheating of the tax payment to the government, immediately call that person to calculate the taxable income and make him pay the tax immediately in the spot itself. Okay, in the spot itself. How this situation comes? A being the owner of a property. Say this property may be 100 lakhs. Okay, he temporarily gives this to B for 101 lakh and B sells it for 200 lakhs. Now the profit for A being 1 lakh, the profit for B being 99 lakhs. In this case, assume B is a loss-making entity. Already he has a huge loss. He has around, this is the profit, he has already a loss of 100 lakhs. B says, sir, 99 lakhs profit. Already I have 100 lakhs loss. If I combine these two, my net effect is only 1 lakh rupees loss. So I will not pay the tax. A says I purchased it for 100, I sold it for 101 lakh, so I get a profit of rupees 1 lakh. But in detailed scrutiny, we came to know this is Mukesh Ambani, this is Anil Ambani. Mukesh Ambani, Anil Ambani. Anil Ambani is making loss. Immediately Mukesh Ambani says, don't bother. I'll give you 200 rupees, 200 lakhs worth of asset for 101 lakh. You take it. Then you sell it for 200 lakhs, make huge profit. That profit you can set off your loss. I make only 1 lakh profit. Further 1 lakh rupees, I'll pay the tax. Originally, this income is for whose income? A's income only, no? As B being the brother of A, in order to avoid his tax liability, he transfers his asset but much lower market price to his brother, where he is not having any income, asking him to set off his profit to that loss. That's how A now cheats. This is called avoidance. Can we do so? Can we do so? We should not do so. So if the assessing officer comes to know that, then they will take the actions and ask him to pay the tax immediately on this full value. The assessee is likely to charge, sell, transfer, or disposal of his asset. The asset may be movable or immovable, whatever it may be. For what intention? To avoid the payment of any tax liability. Sometimes it may also happen. I may have 100 lakhs rupees worth of share. When on 25th March 25, 26th March 25, I will get 10 lakhs rupees dividend from this. What I'll do? Immediately 25th, I'll transfer to my spouse or my daughter or my son. Son's name. So when? On 25th. Again on 27th, I'll get it from my same transferee. Okay. I transfer on 25th, get it back on 27th again. Because of this reason, what happens? Exactly on 26th, this share is in my spouse name or my daughter's name. Clear? Now the dividend is received by my spouse or my daughter. Though they don't have any taxable income, they will say, I don't have any income, I am having only this income. That's how they can simply cheat, no? So I transfer, after dividend transfer to the transfer, again I will get my share back. Then the 10 lakhs comes to my own same family. That's what about cheating like. So that happens here. The total income from the commencement of the previous year up to the date of proceedings under section 175 is taxable in that year itself. So the assessing officer will take the actions under section 175 and tax will be leviable in the same person's name. So sell, transfer, dispose of any asset. The asset may be movable or immovable. Why do I transfer? Avoid the tax liability. If I keep 1 day extra, I may get the extra income. Okay, what I do? Transfer. Now the owner gets a dividend, again transfer it back. Or my asset is transferred with much lower rate, making my profit is lesser. That way also I can cheat. So if the assessing officer finds it, then immediately they will finish up assessing up to the date of transfer and levy the tax immediately. That may also be possible. Section 175. Transfer of any property to avoid the tax. So we have seen the first one is all about shipping by a non-resident. Second one is person leaving India permanently. Third one is temporary purpose AOP, BOI, AJP. Okay, association of persons, body of individual as well as artificial juridical persons. The fourth one is cheating, like avoiding tax. I am transferring the property to avoid the tax so that the income will be transferred to some third party's income. Right. Now, last one. So you know that previous year is not necessarily for 12 months. It may be sometimes less than 12 months, right? For the newly started business. For the newly started business, from the date of starting to the date of 31st March, the year end will be considered as one previous year. It may be less than 12 months. Similarly, continuing business, we are supposed to close this in this year. The business was started almost 10 or 20 years ago. In this previous year, 1/4/2024 to 31st March 2025. Okay, this is the previous year. A business run since very long ago. I supposed to close on 1/1/2025. So this date I supposed to close down. Clear? So then the business was in operation only for this period, almost 9 months, right? So automatically what happens, I have to find out the taxable income up to this period and ask him to pay the tax within the same year. So previous year is equal to the assessment year. So previous year from 24 to 25 is assessed in the same previous year, 24-25. That's why it is called assessment year, and ask him to pay the tax there itself. But in this case, one exception. Or the previous year income can be payable in the next assessment year. This is the option. In this case only. In this case, the last case we have the option. Business or operations carried on by assessee is discontinued during the previous year. Discontinued during the previous year. The income from the first day of the previous year up to the date of discontinuation for this period, right, is assessed in the previous year itself, and the assessee discontinuing the business profession shall give within 15 days of such discontinuance notice about the discontinuance to the assessing officer. So he has to give within 15 days, probably 16th Jan 2025 or 15th Jan 2025. Within that period, he has to intimate to the assessing officer and pay the tax. Okay. SPP is discontinued on 31st July 2024. AO has discretion to assess in the assessment year 24-25 or 25-26. In this case only we have the choice. That too, assessing officer's discretion. The assessing officer can assess the previous year income in the same previous year, or he can go for the next previous year. It means the succeeding assessment year he can value. Is that clear? So what happens? 172 is all about shipping. 174 is all about leaving India permanently. 174A is all about AOP, BY, AJP for temporary business, and 175 is all about avoid tax, and 176 is all about discontinuing business. Is that clear? These are the 5 scenarios. So I have seen most of the exams. 3 attempts once or 4 attempts once I have seen such illustration. Previous year income is assessed in the succeeding year, means assessment year. Is there any exceptions where the previous year income is assessed in the same previous year? Yes. What are they? These are the 5 heads to your answer. Okay. So in CME Inter, most probably just listing these 5 heads is more than enough for scoring 5 to 10 marks. In CMA, you need to add some extra points, like sometimes these like one word question asked. So I have given the one word questions like here. So this question and this question, this question. These are the examples for one word questions. So that's how we can expect the illustrations in this particular pattern. Clear? Listen, as you are being the tax expert, Mr. A approaches you to find out his tax liability. Okay. Now, what you have to do to find out his tax liability as being the tax expert? Step number 1, you have to determine the residential status. We are going to study that in detail under section 6. Step number 2, find out scope of total income. We will study that under section 5. We have already studied what is section 1, title. Number 2, definition. Number 3, previous year. Number 4, charging section. Number 5, scope of total income. 6, residential status. Clear? Sequentially will come one after one. Okay. Now, so you have to ask his residential status and what are the total income he has. Residential status, as per section 6, if he is being individual person, we can classify that into 3 different varieties, forms. resident and ordinary resident, resident but not ordinary resident, non-resident, like three classifications we have. Step number 1. Step number 2, scope of total income. Okay, income. Clear? Income may be of three varieties. It is earned in India, it is earned outside India. Indian income, foreign income. And it's a blend of these two, Indianized foreign income but Indianized, like Indian income but seems to foreign income but seems to be Indian income, like Indianized foreign income. Like I'll explain that all these things under section 5. This will be under section 6. So 2 steps. If Mr. A approaches you, ask him, or you can find you what could be his residential status, whether he is a resident ordinary, resident not ordinary, or non-residents. Then ask him to show all his earnings. You classify the earnings into 3 varieties, whether the earnings are from India or outside India, or outside India but controlled from India, foreign income but controlled in India. So these are the 3 income. Then what happens, if you are being ROR, all the 3 income are taxable. All the 3 income are taxable. You are the man of soil. You have to support Indian government. Wherever you earn, give me something. That's how Indian government asks you. Whether you earn in India, outside India, or foreign income Indianized, all the income will be taxable. If you are being non-resident, we have studied under section 170, shipping business. Only the Indian income portion is taxable. Sir, I am US, sir. Always I am living only in US, sir, and doing business in US. How can I ask? Government says, okay. But if you are coming to India and temporarily earning some income, that income is from India, no? It's Indian income. You have to pay the tax for this. These 2, you no need to consider. I won't care about that. But I'm ROR, sir. Oh, then you have to pay the tax for this as well as for this. You no need to pay the tax for this. So, Mr. A approaches you, ask him what his residential status, or you find the residential status based on some data as per the provisions under section 6. Ask him all the income, at least to know how much fees we can fix, right? If he is crorepati, you cannot fix the fees accordingly, right? So you ask the full income first. Ask the income. Categorize the income, whether the income earned in India or outside India but controlled from India. The 3 income. So based on his residential status and income type, you can combine these 2, find out what are the incomes are going to be taxable. Step number 5 and step number 1 and 2 over. Out of this income, some income falls under section 10, means exempted. That income is not going to be considered. Step number 3. Find out the exemption portion of the income which is not chargeable tax, usually mentioned under section 10 and of course 13A up to 13A. Section 13A is all about political parties' income. Some political parties' incomes are exempted. Okay. So they can claim no tax. Similarly, some trust, they can also no need to pay any tax under section 11, 12 and all. So predominantly at your level, you will study only few items of section 10. And thereafter, you have to classify his income. Indian income, foreign income, so okay. From where he gets, because of his employment, because of letting out, because of business, property sale, or any other source. Classification of heads of income. Section 14. Section 14. Section 14A is all about disallowances of some of the expenses meant for the exempted income. You claim some expenses meant for the exempted income, to be deductible for the taxable income is not permitted in the section 14A, disallowed, 14A. Before that, section 14. 14 section classifies this income into 5 heads. 1 plus 4, for memory, 1 plus 4, 5. 5 incomes. So, section 14 is all about classifying income into 5 heads. Number 1, salaries. Number 2, income from house property. Number 3, profits or gains from business operations. Number 4, capital gains. And number 5, any other sources of income. 3 sections are going to be dealt under section under salaries, and 22 to 27 is all about house property income. 28 to 44 is all about PGBP income. 45 to 55 will learn in these sections will understand capital gains, and these sections are meant for the income from other sources. Clear? We'll study all these things one after one. So 5 heads of income. We'll be studying all these things in detail. Mr. A makes around 50 lakhs income per year. He has to pay huge tax. And A's minor son and spouse. Okay, minor son is not working, just studying, has no income. Spouse, housewife, has no income. Up to say around 3 lakhs we don't have tax, or we assume up to 15 lakhs we have lesser tax or very meager tax, like okay, certain level after we have to pay 30% tax. A is falling under 30% slab. Okay, we assume so. A has to pay 30% tax, minor son has no tax, spouse has no tax. A has to pay 30% on 15 lakhs, 15 lakhs he has to pay tax. Okay, suddenly A makes a plan. Out of his 50 lakhs, he says 5 lakhs for minor son's name. This income is for my minor son. Another 10 lakhs for spouse name. And he says my income is only 35 lakhs, sir. I'll now pay the tax on this 30% around 10.5 lakhs. My minor son 5 lakhs are fully exempted, sir, no tax, sir. My spouse pays just 10%, 1 lakh, sir. So our entire family put together 11.5 lakhs will be payable. What happens? All the income earned only by Mr. A. If all the income are clubbed in his own head, it will be 50 lakhs. Higher income, high tax will be payable. Progressive. Income tax is progressive nature. Higher the income, higher the tax rate. In order to cheat, some house property I have, I just transfer the house property to my daughter's name by will or free of cost, stating that it's my daughter's property. Hereafter, whatever the rent comes, it's the income of my daughter. Another house property from where I am getting the rent, I transfer that also, or business, I transfer that business to my spouse name. Any profit comes, I say it's my spouse profit. And income tax department asks about, do you get any consideration from your daughter? Money. If you are selling your business to third party, you'll get some lump sum consideration. If you are selling that to or transferring to your spouse, are you getting any money? Sir, spouse, sir, how can I, sir? No problem. That income is also yours. You have to pay the tax. That income is going to be clubbed in my income. You cannot show. Immediately this 5 lakhs, this 10 lakhs is clubbed, and the income tax department says 50 lakhs is your income. For that you have to pay that 30%. You cannot escape. If you are stating that some of your income somehow being the other income, like an income tax deducts, finds that income and adds with your own income, that is called clubbing. Clubbing of income of spouse, minor child, etc. Clear? So first 5 income. So, oh my God, it's all these things are clubbed in my head, means taxable. So I just transfer all this to my minor son and daughter and the spouse name. Everything will be again added back. Sir, last year I made loss, sir. Oh. This year gain, sir. Okay, last year loss you can adjust in this year. I earn 1 crore rupees profit. Then I have to pay 30% tax, 30 lakhs. Okay, I will be ready to pay tax. But if I make 1 crore loss, will you give me 30 lakhs tax back? Government says, no, loss you don't come to me. Gain, yeah, I am very happy to collect from you. Sir, what? Not justifiable, sir. Previous year I had lost. This year only. Oh, oh. Did you show all those losses in the previous year? Yes, sir. I showed all these things in the previous years. Okay, to the government. Loss. Still being the loss, you are showing the government, sir, I made a loss. Next year I made a loss. Next year I made a loss. You are showing that. How can you show? Filing the ROI, return of income. Showing means filing your return of income. I showed everything return of income. See, sir, this year only I made a good profit. Those loss can be adjusted here. That process is called set off. Unless you show the loss in the previous year, you are not allowed to set off in this year. Clear? That's what the next step. Okay, set off and carry forward. And some special income also be considered. Some special income. Okay, some special income. If you say, sir, I'm very poor, sir. I don't have even single penny, sir. I'm not earning anything, sir. Okay, good. Very happy. You're collecting all the things in black form, black money form. Okay, you have 2 crore rupees under your bed. If you open the bed, all the currencies are there printed. Freshly printed and packed. 2 crore rupees. Not showing even single penny outside. What can you do? You have to show, you have to keep there only. Okay. Suddenly you fed up with all the 2 crore rupees you have in your home. You want to spend lavishly a day. Lavishly. Okay. You go to a restaurant, a star class hotel. You called all of your friends, including me, and the buffet lunch and dinner cost us 5,000 per head. You just throw all the cash. Sir, I have so much of it. No problem. The department come to your home the next day. You say that I don't have single penny, but how can you spend so much of money? If you just think I cannot explain that, sir, no problem, I will explain. The department will explain. The entire bill you spend, is considered as your income. How will it be possible to spend so much money without income? You hide all this income in the previous year. So, you spend out of your hidden 2 crore rupees, 1 crore rupees for this birthday party in a star class hotel, grand manner. Assessing officer the next way will come. What about my part? You have spent so much money to all, no? Give me. Sir, I don't have any earnings, sir. From where did you get all this money? If you are not able to explain properly, just similar to the way how you express when you are having unknown questions asked in the exams. Some question you have not studied, seeing that question in the question paper, that's a shock. Same way, the assessing officer expects what's the answer. Sir, no problem. I will calculate. That entire 1 crore is your tax, the taxable income. Okay, I will be ready to pay the tax. So, what's the tax rate? 30%? No. As regular tax rate may be 30%, we found no. Assessing officer, I only come and search and found that you have spent so much of money, so you are earning. So, the tax rate is slightly higher. How? 78%. Out of that 1 crore, you have to pay 78 lakhs to the government. What are the income you hide and found by the department and taxing by the time, it is taxed at the rate of 78%. Left with only 22%. With a small plate to sit somewhere near the central bus stand. Later, right? So that's all about special income. Also be clubbed. Special incomes are going to be taxed with the higher rate, 78%. By adding all the total income, you will get gross total income. This is called gross total income. Gross total income under section 80B. Under section 80B. Gross total income under section 80B. Clear? Now, so first step is over. Gross total income. From there, some deductions you can claim. Sir, I am very young and energetic. I am earning so huge money. You are asking me to pay the money. Okay, tax. Okay, I am willing to pay. But after some year, I may go for retirement. I don't get any savings. I cannot have any money. How can I live, sir? Oh, is it so? During your earning period, out of your earning, some money you can save for your medical purpose, medical insurance. You need to have the house property, borrow and buy house property. We want to educate my daughter, son, and all. Spend money for that. Okay, all those spending, education loans are spend that. For all those spending, you can spend some money. That money can be deductible from your gross total income. After that deductions, whatever the leftover will be the total income set. That's a step number 10. 10 steps are there. If anybody approaches you to find out the tax, ask him his residential or find the residential status. Ask him what are the total income he has, what sort of income. You classify that income into three ways. Scope of total income. Third one is all about out of those incomes, some incomes are not considered for the taxable purpose, exempted. Balance all the income are classifiable under 5 heads and group and accumulate that. After that, if there is any violation or cheating, like to transfer somebody else's name, then club all those things. Some hidden income also be addable. After that, sir, previous year and made a loss. Okay, adjust that loss in this current year's income. Leftover will be the gross total income. Today, okay, sir, tomorrow, okay, for the tomorrow's purpose, you can claim some deductions. Subtract that. The balance will be the total income. The total income is the base on which you are going to pay the tax. On which you are going to pay the tax. Is that clear? 10th step. On this total income, you have to apply the tax rates. Apply the tax rate. The tax rate given in Finance Act. Finance Act. Is that okay? As per the Finance Act. And find out. So, if the total income is say 10 lakhs, tax rate assumed to be 10%, then 1 lakh will be your tax. Apart from that, you have to add surcharge. Surcharge. If it is applicable, you have to add additional tax. And sometimes there may be rebate. Okay, sometimes there may be rebate you can subtract. Okay, add surcharge and subtract the rebate. And health and education cess also be added at the rate of 4%. Surcharge is the additional tax we are levying. Okay, for the higher income owner. If you are earning more than 50 lakhs or 1 crore, then there will be surcharge. It runs through up to 37% in the old tax regime, 25% in the new tax regime. So we have calculated all these things later on. The next chapter will be that. And after the definitions, we will go for the tax calculations. Surcharge. Okay, if your tax is 1 lakh and your income is very high level, 50 lakhs and above, you have to add another tax on that. Maybe around 5% or 10% you have to add. So if you add 10%, that is called surcharge. Sir, my tax is only 3,000, sir. Is it so? Okay, you can waiver completely. No need to pay any tax. If you are having high tax, and you will be charged with one additional tax is called surcharge. Very small tax only, sir. Waiver will be there. That is called relief and rebate. Relief and rebate. Okay. Those earning more than 50 lakhs, in addition to this, they have to pay one more tax is called surcharge. Those who are earning just a little bit money, like 5 lakhs, anywhere between 3 lakhs to 5 lakhs, they may given some relief also. The relief will be rebate, surcharge may be the additional tax. Apart from all these things, health and education cess 4% will be leviable. 4% will be leviable for health and education cess. Cess is nothing but if you go to the restaurant, have the food, the bill comes around rupees 500. You are supposed to pay the 500 rupees in the counter. In counter, there is a donation box. You pay this and you drop 10 rupees here. For the poverty line people or orphanage, we are donating this. Have you seen that, right? Some hundi like they may keep for collection and of any donations for the orphanage and all. You pay 500 rupees for their hungry, we pay another 10 rupees. Similarly, you pay 500 rupees to the government, 5 rupees you pay for the other purpose. That other purpose is for the health and education cess. For higher education, okay, higher education, some medical facilities, hospitals, AIMS and all, some government hospitals, it needs more equipment and more spending. Where do I get the money, sir? Okay, if you are being the good earner, apart from the government's requirement, you spend something for the education purpose as well as medical purpose. Okay, the tax what we collect, the government collects, is for the government's planning expenses. They may have lots of planning in this year. Out of so much of collections of revenue, so much meant for interest payment, defense requirement, agri development, business development, make in India development. Okay, the money goes. We forgot about the education institution and the hospitals. Okay, we collect some extra money for that purpose also. Okay, this cannot be interchangeable to use for other purpose. That's what about the purpose. Anyhow, you understand 4% will be always added over the regular tax, which is the cess. Tax can be used for the government's spending. Cess is for the special purpose. Only these two purposes they can use for the higher education, research, and all. And from there, we have to subtract the advance tax, TDS, TCS, and all. Some relief will be given. So, final net tax liability will be payable. Net tax liability will be payable. Is that clear? Now, understand that Section 80B is defining. Section 80B is defining gross total income. Gross total income. Section 2 clause 45 defines total income. What is called total income, sir? Section 2 clause 45 defines. Section 2 clause 45 defines. Total income is nothing but summation of all the 5 aids and clubbing and after all these things, after deducting the deductions mentioned under section 80 series. 80 series. So we have these deductions list. We'll study that later on. Okay. These things we'll have later on. Okay. Now, the total income may be 6,25,322. This can be rounded off to the nearest 10. 6,25,320. Similarly, 6,25,326 can be rounded off to the next higher number, 6,25,330 or 5. That is also nearest to next number. Rounded off to the nearest 10 rupees. So when you find out the total income, not gross total income, the difference between the gross total income and total income is after subtracting the deductions available under section 80 series. Okay, what? For the education loan you borrowed, interest payable, medical and insurance premium you purchased, for that any premium you pay, any education fee you are paying for the daughter and son, children, and house property you purchase, for that repayment of any loan, any payment also be subtracted. So these deductions, okay, we'll study that later on. Study all these things, forget all these things in the next year itself. Okay, all these sections will be sunset sections. Maybe only for this year it will be applicable. Next year most probably will not be available. Okay, sunset. Okay, these are the sunset sections. Like, so you have little bit idea about that. Usually in CA, no, all the new sections supposed to be implemented will have more importance in the examination. Those sections will not be hereafter applicable in the subsequent period, will have least importance in your exams. So you no need to panic with section 80 series. Hereafter we don't get any deductions. Oh, no deductions, sir. Yeah, no deductions. But you will be getting huge tax slabs, exemptions. You will get no tax for higher numbers, okay, in the next year onwards, right? So 80B is all about gross total income. Section 2 clause 45 is all about total income. Section 2 is the definition section. In section 2 sub clause 45 defines total income. Total income is this one, right? After finding the final tax liability, that should also be rounded off to the nearest 10. If you calculate the tax on this, if the tax amount say 5,237, this should also be rounded off to the nearest 10. 5,240, like you can round off. Rounding of the total income to the nearest 10 as per section 288A. Rounding of the tax nearest to 10 will be as per section 288B. to 88B. Is that clear? Yeah, that's all. With that, introduction chapter is over completely. Clear? So hereafter we will be studying one after one all the items. What are the content we have discussed here? Okay. So we have covered 2 points in the introduction lecture. In the very first lecture, we completed the components of income tax laws. It's not income tax act, it's an income tax law. It's nothing but interpretation of the act. 5 components. You have to understand the Income Tax Act 1961. I just narrated what are the sections and how can we read section, subsection, class, subclass, para, and explanation provided on all the classes. Provided are the exempted classes, exceptions. Some. And explanation, some terms may be explained in detail in explanation paragraph. All these things we have discussed, around 298 sections and schedules also available. That's how we discussed. Annual Finance Act. This will be the act published during the Finance Bill. Finance Bill becomes Finance Act. Usually published in 1st February every financial year. That will be applicable for the coming, hereafter whatever the coming financial year is there, no, for that it is applicable. Finance Act. It will carry the rate of taxation as well as some amendments in the Finance Act. That will be available in the Finance Act. And income tax rules, the procedural aspects will be covered in this. And sometimes circular and notification. Circulars are nothing but the department's requirement. The CBDT may send some circulars to the departmental officers to interpret that. It's not for the assessees. Notification, government notification will be published in the official gazette for the general some changes, like during the sudden requirement there may be some modification. So during the COVID time you need to pay the tax lesser value, or you can extend the period of payment at all, announced in the official gazette. And some legal decisions, there may be some confusions. For those confusions, that thing will go to the court may give the judgment, and that judgment will also be a base for interpretation. So all these things are the first block. And second block is all about computation of total income and tax liability, the steps. Okay. Before this second block, we started with assessment year and previous year. Previous year income is assessed in the same previous year. That is nothing but exceptions to the assessment year concept. And some expenditure incurred for the exempted income is not deductible. Also, we studied in the section 14A. And charging section under section 4, we have studied charging section. So you have to compute the tax as per Income Tax Act, and the tax is determined based on the Finance Act, and it is for every person. That all we discussed under section 4. And income of the previous year is assessed in the previous year itself, but there may be exceptions also. Also, we have studied under section 172 to 176, 172, 174, 74A, 5 and 76. Those items we have covered. And the complete steps involving for the calculation of final tax also we have discussed. So these are the 2 blocks we have covered. Clear?